The company behind the world's largest stablecoin just made a shocking move. Tether is entering the AI race, not investing in AI, building their own AI, a large language model that runs on your phone. No cloud, no servers, no big tech dependency. But here is what makes this story explosive. While Tether launches AI, critics are calling them theoretically insolvent. Welcome to Wall Street Lens. Let me explain what Tether just announced. QVAC Fabric LLM. That is the name of their new AI system. What makes it different? Most AI models like ChatGPT run on massive cloud servers. You need expensive NVIDIA infrastructure. You need data centers. You need billions of dollars. Tether says they have changed that. QVAC Fabric LLM can run on devices you already own. Your laptop, your desktop, your smartphone. Even consumer-grade graphics cards. It supports GPUs from AMD, Intel, NVIDIA, Apple Silicon, and mobile chips like Qualcomm Adreno and ARM Mali. This is a big deal, but it gets more interesting. You can actually train and fine-tune the AI on your phone. Not just run it, train it. Tether calls this personalized AI that learns directly from users. No internet required. No cloud upload. Your data stays on your device. Complete privacy. Why is Tether doing this? Their stated mission is to decentralize AI access. Right now, AI development is controlled by a few giants. OpenAI, Google, Microsoft, Meta. You need their servers, their permission, their terms of service. Tether wants to break that dependency. The software is released under Apache 2.0 license. It's Ponte. That means it is open source. Anyone can use it. Stedge, anyone can modify it. Developers can get started with just a few commands. Pre-built adapters are available on Hugging Face. Tether is making AI accessible to everyone. At least, that is the pitch. Now, here is where the story gets complicated. Who is Tether? They issue USDT, the largest stablecoin in the world. Over $100 billion in circulation. USDT is supposed to be backed one-to-one by real assets. 1 USDT equals $1. That is the promise. But some people are questioning that promise. Arthur Hayes is a billionaire, co-founder of Bit2Mex. He recently made a bold claim. He said Tether is running a massive interest rate trade. What does that mean? Tether's reserves are no longer just cash and treasury bills. They now hold significant amounts of Bitcoin, gold, corporate debt, secured loans. Hayes did the math. He said if those holdings drop by about 30%, it would wipe out Tether's equity. His exact words, USDT would be theoretically insolvent. That is a serious accusation. About the company that backs $100 billion in stablecoins. It gets worse. S&P Global Ratings just downgraded Tether. November 26. They gave Tether a 5 out of 5 on their stablecoin risk scale. 5 means weak. The worst possible rating. S&P cited limited transparency, rising exposure to higher risk investments, credit risk, market risk, foreign exchange risk, interest rate risk. Tether CEO Paulo Arduino fired back. He publicly criticized both Hayes and S&P. He called their assumptions inaccurate. He defended Tether's reserves. But here's the problem. Tether has never completed a full independent audit. They release attestations, not audits. There is a difference. And that difference matters when you manage $100 billion. So let me give you my analysis. On the AI front, QVAC Fabric LLM is genuinely interesting. Running LLMs on smartphones could democratize AI access. Privacy-preserving local AI has real value. Open source release builds community trust. If it works as promised, this is a positive development. On the financial front, I am more cautious. Tether is diversifying reserves into volatile assets. Bitcoin, gold, loans. That not how traditional stablecoin reserves work. If those assets decline significantly, a one-to-one peg could be at risk. Not guaranteed to fail, but the risk is higher than before. Here is the bigger picture. Tether is trying to become more than a stablecoin company. They are building AI. They are investing in Bitcoin. They are expanding into new territories. Diversification can be smart, but it also introduces new risks. And when you are the backbone of crypto trading, those risks affect everyone. My bottom line, Tether's AI move is innovative. But the timing raises questions. Are they building the future or distracting from financial concerns? Maybe both. Only time will tell. What do you think about Tether launching AI? Smart diversification or red flag? Drop your thoughts below. Subscribe for more market clarity. Wall Street Lens. See the market clearly. See you in the next one.